chat. Welcome to the UTG show.
So comparative to Root, right? Root, before it hit its macro spring, we wanted to identify, right, the bottom trading range in this accumulation that we saw at the bottom of the spring, to hopefully identify where the overtake of seller absorption into buyers would stand, and hopefully lead to that macro trend reversal, right? Leading into this, right, we saw GME enter this accumulative range on low volume here, right, up until this candle here, right? This volume overtook the entire previous trading range once it entered, right? It's the first sign of potential seller absorption, just like we saw on Root over here. Basically, same spot, right? Then we saw price cascade down, but on low volume. Once we got back down to that range, we saw buyers step in once again, equal or greater volume, higher than the previous trading range. Just another second hint that potentially this is where the buyers are going to ultimately take over, right? Then we're looking for the actual breakout, right? We want to see in Wyckoff's accumulation, we want to see a break of the range through previous highs, which we did see here, and then we want to see a back test, right? Looking at this green box, this was previous support and resistance. We saw bounce here and actually break through, back test a couple times and reject. We know this is a spicy area. So the fact that we have now broken through, came back tested it, turned that resistance into support to launch us higher, fantastic sign, right? And we saw the same thing with Root. Granted, this is just, the 1 hour chart and one candle, but it did the same thing, right? Made a new higher high over previous trading range, back tested, and then went higher. That's exactly what you want to see. Following that, right, we ended up seeing mega volume coming in here. You can see this candle here was about a little over 2.5 mil in volume, right? This one overtook the entire previous range up until looks like October 27th, right? And it completely broke through this this demand zone as well, right? Or it was supply. Now, what do we look for next? Well, looking at the 4 hour chart, we're seeing that, there were TD counts, right, in play here. While that goes, let me just fix this here. There we go. Let's get this guy up. So we see a TD9, right, on the 4 hour. Now, what to expect in the meantime? Well, we did leave a gap here, right? So the most bullish thing you can do, especially using Root as the example, right? So here we broke through the range and we actually went all the way back down and back tested this previous range, right? We look back, we see all of this garbage, accumulative, or in this case it was redistributive, before we broke down further, but we could tell that this is clearly an area of support, right? Bounce, 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 bounce till it finally broke through. We can see in Root when it broke through that, it actually rejected off this 1 hour 200 MA, but when it came back, it actually went all the way back and retested this zone, this demand zone. Once it did turn it into support and launched it right back up to where it was. And again, looking left, we know this area is clearly a point of interest for buyers and sellers, and that's where we saw it consolidate before it ended up ripping up, right? So we're kind of looking at the same thing on GME. You look left, we know this box, this green box here, this is your next demand zone down, right? It's about 21.75, right? If it breaks below, even, let's see here, So 22.26, right? Because here's your box. Tested, came back, tested, failed, right? So that would actually be your first spot, is your 22.25 area. If that fails, it would look at the next demand zone below that. That would be your 21.80 to 21.50, this area here. So that would be the most bullish scenario, especially if price declines down into it, perhaps fill this gap, hit the indicator, whatever. But if price does come down and we see small red volume, super bullish, right? Because the trending move is very weak. It's mostly just trying to test previous zones for buyers, potentially again filling the gap, maybe hit the indicator, whatever. But until then, right, we're super bullish. We're seeing bulls step in with increased volume, especially on Friday's candle here. I'm not too worried about this, right? TD is a trend exhaustion indicator. It's not a reversal indicator, so to speak. So that's what I would say about Root here in the interim time. If we were to look at the smaller time frames, we'll kind of get into what I was looking at here. Okay, so we know that if we look on Root, we knew that basically from the move up to when earnings was, it was 9 days. There was a weekend in there as well, so figure 7 days, right? A week, 6 days to a week. We know GME is in the same spot, right? From the move up, we're in roughly the same spot, okay? So I wanted to, this is where the tin comes in, I wanted to see if I could figure out a time frame for this, right? Now I've been using fib forks for Wyckoff because they have seemed to respect them quite a bit. So in your buying climax or selling climax, this one's your buying climax, into your automatic reaction, and then to your test is where I did those 3 points on this fib fork. You can see that every time it dipped below this 1.618 level, price was immediately rejected back up into the fib channel. Did it once, twice, and then recently at the end of the day here it did it for a third time, especially on this TD9 here. So that's why I've been using this fib channel here most recently. But back to the time frame, right? So I ended up doing a fib time zone, and I wanted to see if this actually coincided similarly, right? So let me pull up right here on the smaller time frame. Give me 1 second here. Okay, here we are. So now a couple things I noticed when comparing them, right? Because I don't like to, so to speak, compare price action from one chart, from one stock to another chart. But what I do like to do is I like to, especially when dealing with Wyckoff, because they can operate based off of RSI pivot points. And so I know this chart looks like garbage right now, and I apologize, but we'll get there, I promise. Now looking, comparing the 15 to the 15 here, right? So I took the same fib time zone from the buying climax to the automatic reaction here as well as I did here, right? And we notice that, look at the comparing the RSI, right? There is an RSI channel that the 15 has been in, constantly giving multiple touches of bullish divergence, right? Going down, going up. You don't see it here, but it is here, okay? Especially when comparing these lows, it's continuation, right? And especially from this point here, right? And so looking at this, I'm like, man, well, if we only got 6, 7, 8 days comparing these two comparisons of charts with their time zones, I try to map them out. And if we compare the fib time zone to the spot on this RSI channel here, right? We're at the top of the zone testing the SMA. We're at the top of the zone testing the SMA, okay? It appears that we might be here, right, in this fib time zone here, which meaning if we take our spot from here, notice that the MACD is close to crossing but hasn't yet. Also, MACD close to crossing but isn't yet. Now let's count these time zones, right? So from that spot, we have 1, 2, 3 fib time zones until launch, right? And from here, 1, 2, the third time zone actually is, I apologize. Let's see here. Oh, I was one off. I apologize. So let's see. 1, 2, 3. I needed to zoom out more. That's why. Okay, so 4. And so looking back here, there's the fourth. 1, 2, 3, 4, right? So assuming that that's where we're at, we technically have the same amount of fib time zones as Root does as well until it actually launched. So this is something I'm going to keep track of time-wise. I'm going to keep track of as well this fib fork channel. Granted, this is a very high channel. I've seen Jimmy do a lot of high, crazy, volatile projections before, so this isn't something new. We do have an indicator left at 2317. Perhaps in this next phase, right, when we go through this fib channel, we see that in Root it actually made a new higher high. Potentially, we might see that as well, right? Especially if it's near this golden pocket here. That'd be really interesting. Interesting point of interest there. Also, given the fact that the macro 236 is at 22, it's actually 2289. And so looking back at Root's overall structure, assuming that this is the same, clearly this was a spot, and it rejected, and then finally, right, we saw the big gap up. This potentially could be that spot. It also could be other major trend lines, right? This is the 5-year trend line that we've been keeping tabs on. So potentially that might be your ceiling, rejection, or here, right? Could be a couple different things. But the biggest thing that I'm looking at is I want to see consolidation in this area. Whether it pulls back down, fills this gap, as long as it doesn't lose probably 2138, right? That's my line in the sand. As long as it stays above this last support area, this demand zone, and we consolidate until earnings, it's going to be super, super bullish to me. So next, actually, let me get my notes out. So we talked about the fib time zones, the fork, RSI. We talked about the timing. Okay, so let's get out the 4-hour chart, right? Because that was a concern that some people had, right? So here, I'll turn off the drawings for this, and I'll turn them off once I switch here as well. Okay. All right, so the question is, right, oh, well, TD9, we're going to get the reversal. Again, TD is not a reversal indicator, although it can lead to it. It's a trend exhaustion indicator. It doesn't necessarily mean reversal, right? We look in the past when we see especially after volatile moves like this, right? This is exactly what you want to see as a reaction from a spring. You want to see a very hard, volatile, and violent move, and then you want to see it consolidate. If we go back to the sneeze, we saw the same thing, right? We had the spring, right? Little accumulation at the bottom of the spring. It busted out, it back tested, and then we saw that violent rip up, and then we saw consolidation. We actually saw a TD print here as well. This one was a 4-hour TD7 bearish. I bet you if we go down to the smaller time frames, we'll see more as well, which yes, we do, right? We saw TD9 here as well, but again, it's not because we're going to see a trend reversal. Even if it retraced back to previous support here, right? If I were to draw a line right here, it clearly came back tested that. It's like, oh, hey, any bias here? And the buyers are like, yep, let's go. And that's what they did, right? And we even saw a 13 come. Again, we saw this back test. If you were to draw a line and look left, look at this. Bounce, 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 bounce. Yeah, it turned what was previously resistance into support and launched higher, obviously, into the sneeze. Okay, so this is one example. We're going to go look at the squeeze now because guess what? It's going to do the same thing, right? Here's the spring. Here's the accumulation at the bottom inside the spring. It broke out, broke higher. It consolidated, and even on the weekly, right? We printed a 789 TD. Again, this is not a reversal. This is trend exhaustion, right? It again, if you were to back test, put your line right here, it broke out, it came back and back tested what was previously resistance, turned it into support, and launched higher, right? This is exactly what I'm looking for on GME right now, right? Looking left, right, we clearly have stop loss hunting here and here from the downside and the upside, but we know this is a spicy area. Look at all of this consolidation in this redistributive area. So of course we're running in to the bottom of this range. We're going to find some sort of resistance. The best thing is to now look down below, turn whatever we can into support that once was resistance, and we need to bust through it, okay? That's the biggest thing that I'm looking for in the near-term future. Let me turn to my notes again here. Okay, so the weekly. So let's blow this guy up, right? This is my holy grail, okay? The cat, I had always wondered, right? Why did he post this chart? Why did he post the line immediately when it bottomed here? Well, if we look at the Wyckoff diagram, right? You have this major rounding formation, which kind of looks like an M, right, in the middle, because you're touching two zones of resistance at the top before coming back down to an ultimate support spring, right? We see the same thing in the diagram here, right? We get this kind of M formation, but it's ultimately the whole thing is a round, and it ends up being a spring, right? We see it come out, back test. We see it come out, back test, right? Just like we had talked about earlier. And then we see the spring, right? We see the crossing the creek, so to say. Now, we topped out, right? That's your SOS here, okay? And then what happens when you hit the SOS phase? Well, it always or usually will come back down and test that previous area that once was resistance. So I've marked that off in this red box, right? Same red box here, same red box in the cat's picture. Okay, so we did in fact do just that. We came down, we tested it, and it said the buyers were like, no, 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 we're stepping in, we're absorbing all the selling at this point, and it caused the sneeze up to 64 bucks, right? Same thing here. Now, the biggest, most bullish thing you can do is once you break out and you come back down and back test this previous resistance area and turn it into support, is to continue to consolidate until you ultimately break out of this flag, right? The exact same thing that we just talked about on the 1 hour when comparing GME and Root's bottom of the spring. This is just on the macro view now, right? So um, if the bottom is indeed in, which we looked at on the 2-day, we saw that 2-day TD9. It was a perfect reversal spot there. The most bullish thing that you can get is a long wick on the TD9, among other things, other indicators that we looked at. And so far, we were seeing that type of reaction that we were looking for, right? But now taking this concept into reality, or what are we looking for right now in the near future? So let's actually zoom in on this one. Okay, so these are my writings from the stream earlier, but we'll leave it on here. So if this is the ultimate flag, right? Draw your trend line from the top of the squeeze and the sneeze, and then hopefully, if this is the bottom, we can keep this trend line, and then this is your flag, right? And so, drawing a fib from the 120 high to the 995 bottom presents these values, right? And so, if this is the spring, we want to look to clear previous highs, right? We look at the diagram here. When we jump the creek, we want to break past previous highs that we have made, and we want to consolidate up there and turn what once was resistance, which we saw resistance at 34 to 36 bucks, right? We rejected a few times. And we want to blow through it finally and consolidate above it. Now, before ripping higher, right? Now, the reason why I chose $38 to $46, right? This is just, this is as simple as it's going to get, right? The 46 to 50, this is your golden pocket. You know there's going to be resistance there. If we just simply look left, right, at previous price action, I drew this supply box, right? We saw that we ended up blowing through it, and we back tested it, and the sellers were like, nope, 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 slam it back down. And it back tested again and again and again and again, and still sellers were like, nope, see ya. So we ended up rejecting that. We knew that that's a spicy area up until we hit the squeeze or the sneeze, right? And during the sneeze, we actually back tested it again twice. And twice again, it rejected and rejected back down, right? So this is clearly a spicy area that we know there's going to be resistance. In the last year, we hadn't even got back up to that roughly $40 area, right? We've been capped out at this 0.5 fib level, rejecting off of that a couple times. But what we're looking for now is we need to break past it. We need to make a new higher high over this range that we had. But I'm going to be taking profit in this area, right? For sure. You know there's going to be resistance from the top of this trend line. You know there's going to be resistance because of the golden pocket here. And you know there's going to be resistance based on previous price action and how it rejected in the past. So you best believe it will reject again. Again, looking at the reaccumulation pattern, right, we want it to break above, we want it to consolidate. So my idea is that hopefully we end up breaking into that box and hopefully consolidate. Now, could it just break through the golden pocket? Sure. Could it break up to new highs over the previous trading range and then come back down to 30 or 28? Sure. It could even come all the way back down to this 382 here, and then potentially bounce even higher finally through, right? All of them are possibilities, all of them. But that's why we take profit, right? And so I plan on taking profit at a couple different areas on the smaller time frame, right? We know we have flash targets at the 28, 29 area. We know we got some at 32, right? And then obviously once we enter the danger box here, we need to make sure that we're taking profit in case we don't know what's going to happen, right? And so this is my plan, right? Now, once we finally do break through the golden pocket, if we get a weekly candle, that's what I'm looking for. I want a weekly candle breakthrough and a weekly open and close above it. To me, that's going to be confirmation that we now have 70% chance of hitting the 1.128 fib level at 166. My ultimate profit target is 146, but close enough, right? Same shit. This is the ultimate goal. This is what I'm looking for. You know, what happens in between, we'll deal with it when it comes, but this is the ultimate goal in what I'm looking for. And, you know, potentially, depending on, we don't know what these extra SOS and LPS and SOS phases beyond there are going to look like. Who knows? We're talking huge profit targets now, right? But we'll get to that when we get there. But this is the ultimate plan, anyways, that I'm looking for. And, you know, leading into it, we talked about even down to the 1 hour, looking at the 4 hour, right? I mean, we can even go through some of these actually, just really quickly as a recap of what the indicators look like. So looking at the weekly here, right? We had the reversal on the TD7, which was outside the Bollinger Bands. This is exactly what Root looked like. Beautiful, beautiful. If this can get across the 50 RSI center line, super bullish, right? This is a key thing that we need. Now, this is something that I wanted to point out. If you were to draw a trend line from the squeeze high on the RSI and hit these next 3 points, right, we create a ceiling here. Now, could it be that if we get this price breakout that we're looking for, and maybe we reject in this 36, 38, 42, $46 area, you know, will that coincide with the top of this RSI trend line? Well, very well could. And again, you best believe that I'm going to be taking profit once we hit that, because if this were to reject and consolidate, maybe we do the same thing on the RSI. We hit that trend line and we consolidate above the RSI 50 and break higher for, you know, who knows what's going to happen, right? That's the idea. But it's something I'm preparing for. And so RSI looking great on the weekly, right? MACD, we're starting to get this curl up. We have multiple touches of bullish divergence here as well. The ADX and DMI, we want ADX to start turning and cooking up into hot coffee territory. Same thing with the DMI positive. The DMI negative, since the cross has still been going down, that looks great. This looks perfect for a run up, right? If we look at the monthly quick, so on the monthly, we have tightening bands. We haven't had those bands. Oof, man, it's been a hot minute since they've been this tight. Actually, it hasn't been like that for the entire year. Actually, that's super interesting. So keep that in mind. We do have a little wedge here, right? And we see that we're getting a bounce, right, at the bottom here. This long wick on the 2-day that we saw with the TD9 reversal there. This looked great on the monthly, right? We're back inside the monthly hull. We have a little bit of resistance here to get through around 2472-ish. But if this can get back above the 50, we're in good shape. I'm not worried about the MACD just because MACD takes forever. It's super leggy on the monthly, so I'm not worried about that. And again, ADX, DMI, we're fine. So let's look at the 2-day, right? I mentioned it a couple times, but I haven't showed you. Okay, so here is the TD9 reversal, right? number one bullish thing on a TD9 or 13 count is if you can get a terminal or hammer candle on the TD9 and then we get the immediate reaction, that is exactly what you want to see. And we're there, right? We got that. We did it with some decent volume too, right? Well, maybe not on the 2-day, but on the smaller time frame, right? Comparing this to the last couple candles here, the lead-in phase, this looks great, right? Especially hitting this this MA on the RSI. So tomorrow we'll confirm if we finish above the RSI 50 on the 2-day. I say the 2-day because the 2-day over the past on GME has really shown to be very important, right? It's called the top here, the top here. We also called a nice bottom for a good run here. This is a consolidation one, right? Called the sneeze here. So I really do like this on the 2-day as well as the weekly. But anyways, so we got the spring, right? Spring, we can make a couple lower lows, but it doesn't usually break completely down. So that's exactly what we saw here. We're also above the 2-day hull. We're above the mid-Bollinger Bands on the 2-day as well. We did get the MACD cross so far. So hopefully that will stay through tomorrow. We did get the ADX DMI. We got the two DMIs crossing, DMI being bullish above. So all that needs to happen is for the DMI positive to enter hot coffee territory, as well as ADX needs to turn around and start cooking up as well. This looks great as well. There's nothing I would change on this. It looks fantastic. The daily, right? We get the hull flip, just started turning green. We're above the mid-Bollinger Bands. We're touching the top of the Bollinger Bands here as well. So that's something to keep in mind. I'd love for the RSI to get in the bull zone. MACD looks great, right? Cross under center, both sloping up. ADX DMI positive, hot coffee, that just needs to continue. One thing I was looking at here, so notice how the 50 MA crossing through the top of the Bollinger Bands and back in and out again, right? We saw the same thing here, right? If once it crosses back inside the Bollinger Bands, if we can get above it and stay above it, this is the key area. This is what we're looking for, right? We want this Bollinger Band to continue to slope up. We want the 50 MA to actually pierce it and do something like this while the candles finish above it for a higher price, right? This is the bullish scenario, the same exact thing we saw right here. It came back in, it actually pierced through both of them, rejected, but once we got over it again, that's where we saw the big ups, right? This is exactly what we're looking for right here. And then again on the 4-hour, which we talked about the TD again, so not necessarily bull or bearish, right? It is outside the bands. The best thing you can do is consolidate, or even if it's a little down and fills this gap, whatever, don't care. Like I said, the line in the sand is going to be like roughly 21 bucks, okay? But for now, if this comes down, fills this gap, launches up, sweet. If this thing twiddles around and consolidates here and launches up, sick. I mean, the thing's buried in the bull zone. This MACD is beautiful, piercing through the center line after a cross. We would like to see DMI positive turn around and both continue to make hot coffee going up, but I have no problems with this. This looks fantastic. And so we're monitoring the short-term movement here, especially on the smaller time frame. Like I made that comparison with Root, especially on the time zones. If it ends up lining up with earnings, it'd be just a really cool thing to track to see if it happens. I mean, so far, everything that we've been looking for as far as Wyckoff on the smaller time frames, the accumulation at the bottom of the spring, the volume following after, it's all lined up great, right? It's been perfect to Wyckoff so far, and I want to see this continue on, and hopefully we can get those bigger profit targets from here to 30. I'm gonna officially call 38. That's going to be a major milestone over the last year of what we've had. So hopefully we see this. That's all I got. Thanks.